morning, and welcome to what I'm watching this week for the week of 27 February 2017. Please feel free to go to dreadheads.net or DRC Wealth Management later on today to read the version that I'll be posting at that point in time. It's a lot more thorough and not as brief. So, let's get into it for the week. Uncertainty over Trump's speech to Congress Tuesday night has led to some liquidation in stocks, that as well as the all-time highs that we're seeing on the markets. Trump promised something phenomenal in regards to tax reform a number of weeks ago. He hasn't produced anything on that, so therefore his words Tuesday evening will be scrutinized for policy details. Lack of policy details will, in fact, I believe, be an ember to start the decline of the market. If he does provide some details, that may also counter my personal opinion, and that may drive the market higher in the rally that we're seeing. But again, we won't know more on that until we actually hear what Mr. Trump has to say on Tuesday. I wouldn't be surprised if he didn't include the healthcare sector, automobiles, biotechnology, and our current trade policies in his speech. I would also expect to see some volatility in those same sectors immediately afterwards. Depending on your personal strategy, this could be a buying opportunity, or again, this could be an opportunity to lessen up on some of those positions going forward. Ending the week, the Dow, the S&P, and the NASDAQ all continued on their winning ways. The Russell 2000 did in fact stumble slightly, and the VIX ended up a little more higher, which again starts to show proof positive that the volatility is going to be expected here for this week. On the volatility notes, ending last week, crude oil stayed above 54. Gold continued to rise, government bonds continue to rise, and T-notes are at an all-time 2-week high. Again, this is what I would call a flight to safety. That matched with the hawkish comments from the Fed's Federal Atlanta President Lockhart, who again confirmed that 2 or 3 more rate increases are expected from the Fed. That ties into what they've been saying for the course of all of last year. And of course, if the economy continues to perform, I would in fact expect those rate increases to happen. The next one may be as soon as March or June, depending on the performance of the economy. Also, our brand new Treasury Secretary continued to issue verbiage that wasn't exactly market friendly. Last week, he made a statement saying that fiscal stimulus effects on the U.S. economy this year would be limited. Unsurprisingly, investors took that to heart and they ran to safety, thus gold being up, bonds being up, and T-notes going to a 2-week high. Again, after Trump's speech on Tuesday, we should see hopefully some more clarity as to what the policies will be looking like going forward, and we'll be paying close attention to that as the week continues to play out. On the international markets, Asia closed the week mostly lower, and a stronger yen really undercut the Japanese stocks as the dollar versus the yen trade tumbled to a 2-week low. European political risk continued to increase as the far-right French candidate Marine Le Pen has gained in the polls. If you're not aware of her, she is basically calling for France to also leave the EU, a la London, Britain. So this could be Brexit Part 2. Also coupled with that, in March, Scotland is rumored to put forth a referendum to stay in the EU. Right around the same time, we expect Theresa May, the British Prime Minister, to start getting serious on Article 15 to remove Britain from the EU. Again, volatility is probably going to rule the week going forward. On the commodity side, soybeans took a beating last week, but they finally turned higher on Friday. Corn closed the week with small losses, and wheat stayed under pressure. Slowing exports plus the seasonal shift from buying from South America weighed on the market last week. Grain futures closed mixed on Friday after a holiday-shortened week proved bearish for prices. And finally, the market is showing some exhaustion. It's a bit tired from the continuing rally, and we're starting to show some signs of losing momentum. Again, after Trump's speech on Tuesday, that may or may not continue the upward swing. But if there are some are some words of confidence coming out of Mr. Trump's speech, I would not be surprised to see the rally continue. However, again, if there aren't any policy details that have clarity, this could in fact be a good opportunity to start lessening some of the positions that you're in. The market is in fact still taking in massive amount of inflows from investors. A lot of that is what we would call buyers buying at the high. I kind of grit my teeth at this with the inflows coming in. If we do start to see a market recoil, maybe some of a pullback, these newer investors getting in the market are going to be slightly disappointed. Just keep in mind, what we're seeing right now is not fundamentally driven. It's momentum driven. The fundamentals do not match with market performance. So again, what we see from Trump going forward here and Congress will give us some clarity as to what we can expect specifically for this week and perhaps for the month of March to close out the quarter and going into the second quarter. That's where we're at this week. I appreciate you coming by and viewing. Please feel free to come back next week and or go to dreadheads.net or DRC Wealth Management to read the full version of the weekly market report, what I'm watching this week. I am Bobby Cherry, President of DRC Wealth Management, and again, I thank you for your time.